CPI inflation data for the US came in today under expectations at 1.4% year on year. The initial reaction in the market seemed to be quite positive, looking at stock futures and treasury bonds, but overall I think a lower than expected reading might not actually matter that much at the moment anyway. Of course, one of the main reasons is the $1.9 trillion stimulus package that seems to be on the way. As Democrats prepare to bypass Republicans, it's looking more and more likely that that package is going to be passed by March. However, as we spoke about yesterday, there have been warnings that such a large stimulus package could create a strong pickup in inflation this year and cause the world's biggest economy to overheat. But as I mentioned in the comments section on that video, I do think that inflation will increase, but I don't see it as being this issue that will get out of control. Instead, I think the current issues are of much more importance and much more urgent. And as we spoke about in that video, the new Treasury Secretary, Janet Yellen, who was of course the chair of the Federal Reserve, she's the former chair, she stands behind this stimulus package and believes that the costs and the risks involved in the package are not as severe as the costs and risks involved in doing nothing. So basically she believes that a slow recovery would be much more risky for the economy than an overheating one, which I don't think would happen anyway. Now, one of the things that she points to is the employment level. She believes that the US could be back to full employment by next year if they have the right stimulus package delivered quickly. So that could mean that inflation data becomes more important over the course of this year. And you know what? Inflation expectations are already on the rise. Inflation-protected government securities are reaching the highest level since 2014. So let's say that inflation does rise. Well, some inflation isn't the end of the world. After all, the Fed has been trying to increase inflation for the past decade, and they've already stated that they'd be willing to let it run above their target for a while before taking any action. But if it sustains above the Fed's 2% target, then of course the Fed may need to begin tightening their monetary policy, raising rates, reducing quantitative easing, and so on. Now, the issue is more about how the Fed would deal with a sudden increase in inflation, or if there was some sort of taper tantrum like we had in 2013, which is something we could discuss another time. But for now, there are also deflationary risks about, such as high unemployment, which reduces consumer spending. So investors will be watching inflation data closely this year to see what direction the US could be heading in. Now, having said that, at the moment, the situation in the economy isn't a normal one. The fact that some industries have boomed through this whole situation while others have been completely shut down, the fact that some people are furloughed or unemployed while others can just work from home, the fact that the stock market is pushing to highs while the economy isn't even fully functioning in many ways. It's just not a normal situation. There are all of these big discrepancies. And I think that to a certain extent, headline inflation numbers aren't really going to fully reveal that. Now, there is a case for alternative data, as we've spoken about in videos before, but there's also just a case for having a bit of common sense about the situation and realizing that we can't look at this whole situation with one broad brushstroke, looking at the economy as a whole, because by doing that, that's how people and industries end up falling through the cracks and the world ends up struggling with the hangover of the issue many years after it supposedly ends. But anyway, there's a speech coming up later on from the Federal Reserve Chairman Jerome Powell. That's later today, and we're expecting him to weigh in his conservative, kind of vague way on this whole discussion about inflation and data and so on. So let's see what he ends up having to say. We will let you know about that tomorrow, and I will see you then.